Okay, I know there's a lot of negative news in the media about people buying condos and, people going underwater with the values dropping. And it's so easy to say you're an idiot for buying a condo and you're stupid and you deserve everything you have and you should lose every single penny. I mean, literally on these Facebook groups that I see, like, I don't know if they're trolls or not, but people are saying, like, you deserve to lose everything. I think they're just haters.
Yeah, those are all the people that are just like waiting and waiting and waiting until it reaches like 300K.
Yeah. So they want the values to drop in half, but as soon as they buy something, they don't want prices to raise. They want prices to raise right away. They want to stop dropping, right? Yeah. So it's just all these keyboard warriors that aren't actually going to buy something. They just want to like cherish in people's misery, which, it's unfortunate. It's a sign of the times. They are kind of right though. The condo market is kind of crap right now, and why is that? Because at the end of the day, it's a rhetorical question. I mean, you can answer that.
No. Go ahead.
No, I was just saying that the reason why is because the interest rates are so high. It comes down to that right at the end of the day. So if it's an investment and you're only getting rents of, call it $2,400, meanwhile, it's costing you $3,500
to pay it down,
to carry it.
Yeah,
between maintenance fees, mortgage, and taxes. So let's say your mortgage is, call it $2,600 or so. And your maintenance fees would be another $400, and then taxes another $200 on top of that. People are losing like $1,000 a month, if not more. That's just for a single one bedroom. Like if you have two bedrooms, some people are like, one of my condos, I'm losing $2,000 a month.
So at a little side, it's like this is kind of what we talk about in all our podcasts when we're saying don't hate on the landlord. They're kind of giving you the housing. They're losing a lot of times.
Yeah, because if you're renting, it's actually financially cheaper right now for a period of 1 to 2 years, whatever, that snapshot of window, it's actually cheaper to rent. It costs more money to own right now. But in 25 years from now, that's a different story. Because if you have a 25-year mortgage, you have a 30-year mortgage. Even if you have a 30-year mortgage in 25 years from now, the mortgage should be paid down so much, and the value of a dollar should be worth so little because of just inflation and just the diluting the currency, that your mortgage payments will be a lot less, and mortgage maintenance and taxes will be a lot less than what rent would be. Because rents will always rise with inflation. In fact, that's what causes inflation. The largest majority of the CPI basket is housing, and a huge component of that is rental. So your rents will rise. That's given.
Right.
So I heard a saying once in a while, a long time ago, where it says the rent is the lowest amount you're ever going to pay, but the mortgage amount, other way around, rent is the highest you're going to pay, but the mortgage is the lowest you're ever going to pay, because there's unforeseen circumstances you'll see, such as maintenance. Things break down, you got to replace a fridge or whatever, or even a roof if you have a house. And there's taxes, and that always go up, and maintenance always goes up. So, of course, there's benefits of owning something versus renting. That being that you have the security of tenure. You're not going to have a landlord come in and say, like, I want my house back.
That's the most important thing. Yeah, like I know I'm obviously I'm always going to be for renters because I am a renter myself. And the big pro for us is just, I mean, if it's always going to be on the landlord, if something breaks, it's going to be on them, right? I'm not the one responsible
for capital expenses. Yeah, for sure. But I have so I have a friend or whatever. Her fridge broke and the water line, like she doesn't want to bother the tenant for the ice. I mean the landlord for the ice, right? Because her rent is so cheap. But if she goes bothers the landlord, there's a chance that you kind of like. It's a kind of thin ice because you don't know what the landlord's going to do.
You don't know,
right? So they still bother to pay for yourself.
And to that point, or to your point, is that like the fear of, I don't want them to kick me out. I don't want them to get mad at me. I don't want like I don't want to give them any reason to push me out. Right? So tenure, right?
That's one reason to buy versus own. And yes, it'll cost you more right now, but in the long run, I think it makes sense. So it just depends on everyone's goals. Now, if you're an investor, a landlord, and you're finding that you're negative cash flow, you're in the middle of all this, say you bought Preconstruction, and those are the people that are really hurting right now because prices at the time, at the peak, they were selling for $1,500, $1,600, $1,700 a square foot, depending on where you're at. And meanwhile, the comparable resale would be like $1,000, $1,100, or $1,200 per square foot.
Around that.
So if you have to close on something, it could spell a little trouble for you, and that's what people are laughing at online and making fun of those keyboard warriors. And they're all, you know what I hate? When you have an assignment up there, let's say you bought it for $800,000, and then you're taking a bit of a loss, you're selling for $750. Actually, we have one right now in that, and actually that's outcome. It's not listed yet, so it's not yours.
It's not yours.
It's not listed yet. But anyway, I see all the trolls out there. They're like, I'll offer you $100,000. Screw you, man. Be realistic. You're not gonna buy it. Like LP 500,000. Like no way. It's actually more. Anyway.
Sympathize a little bit. Come on.
Well, no, I don't even think they're real. You're just like trolling for the sake of trolling. Maybe they're looking for a good deal. Maybe they'll try it. That's fine. Yeah, but those people, like, if you're actually caught in that situation, what do you do?
Yeah. I mean, as you were saying earlier, it's bound to bounce back, right? So you're gonna have to hold on to your life. Yeah.
You don't know. I mean, with the skyline like Toronto and the amount of immigration coming in, we had the record number of immigration last year, 1.2 million people, and I just don't see it coming down anytime soon. Yes, they capped the amount of non-permanent residents by way of student visas by capping at 35% or whatever it is. But I think that's just political pressure. I don't think they're actually really truly doing anything about it, because ultimately we need immigrants to boost our productivity in Canada. Like, we have so much shrinking productivity, GDP per capita.
Yeah.
And it's going to get worse with immigration for sure. But the actual GDP number will increase based on importing population. And there's a global fight for immigrants, right? Like the U.S. is fighting for it, Japan's fighting for it because their birth rates are declining.
Yeah.
All around the world.
All around the world. It's a declining population because nobody wants kids anymore.
Right. So now they're fighting for the growth of their social welfare.
Yeah.
By importing younger people, people that can actually work. And the best way to do that is students, because once they graduate from school, they're going to find jobs here, right? So I think all that lip service of capping student visas is just to get some political wins, but ultimately they don't.
It's not that big of a number anyway. They're all here.
yeah. From 500,000 it goes down to 300,000. Yeah, we still have 1 million plus coming to the country at the end of the day. And yes, there's net immigration out of Ontario. There's like a declining population, but eventually it will. Actually, I think it's plus. I don't know exactly where. I gotta look at the numbers again. It might be positive, but ultimately we still have a structural deficit of housing. We haven't built it for the past 2 decades in the past, and the whole time we've had record number of immigration whole way. There's constant people coming into the country, and Toronto, a city like ours,
being the
150, 200,000 people coming to the country, to the city, but we're only building 20,000 homes every single year, and that's just piling on.
Yeah, we can't play catch up forever.
Yeah, so there's a goal of the federal government to create 1.5 million homes in the next decade, next 8 years, I think it is. It's not possible.
Yeah, I was gonna say, how are they doing that?
Well, yeah, I mean, you basically have to double the capacity every single year for housing starts to make it happen, because the most we're doing is around plus or minus 250,000 homes per year throughout Canada. But we'll need 500,000 to make that number work, to get the number of homes that they want. And, in an environment like today, with the interest rates kind of going crazy, no one's building, because it's just not financially feasible, let alone like the productive capacity of our workers. We don't have the trades, we don't have the equipment, we don't have the materials in there that actually can build faster. Maybe in the future there'll be, technologies such as like prefab and like better building, 3D printing, stuff like that will build homes faster. But for now, I just don't see how we can build that many homes to make affordability happen, right? And Ontario just released affordability numbers where they said the average price in order to make housing affordable is $320,000. Meanwhile, the average price of a detached home is $1.7 million in Toronto.
Kind of far from that.
It's not happening. Yeah, and even a condo, just say the cheapest housing stock out there, the average price is $680,000, something like that. You basically have to drop the price by half or more in order to make housing affordable again. Yeah. And look, it's not gonna happen. Yeah. There is an equilibrium for pricing, and if you drop it to a certain amount, it will get sold. It will. There's just too many people in Canada. I mean, just look around Toronto. It's busy everywhere you go. So I don't think the negative news is there. The negative news is out there, but I don't think you should follow it. Okay, so if you're in that situation where you have an upcoming closing, or you just bought something like a new resale condo or something, and you got an okay deal, the prices have dropped, and maybe you're underwater in the mortgage, there's a couple situations that you can do. You can either hold on and hope for better days. I don't know if they will come, but I just don't see this, we're not going to go to zero. Yeah. Right? Yeah. And I don't even see the price going in half, just based on the immigration popularity of Toronto. Now, nobody wants shoeboxes in the sky. I totally get that. But, not everybody can also afford a mansion. And not everybody wants to live in the suburbs either. So there is a demand for it. So hold on as much as possible if you can. If you're on a variable mortgage, rates are coming down. Not as quick as we'd like. But eventually, they will come down to the point where hopefully things will be great again. Now we won't see 2 or 3%, maybe we'll see 4%, but there's way out of it. Rents will rise eventually as well too. And the other thing I would say about housing is that, like, you can either sell right now and take the loss, right? And if you do take a loss, a slight loss, at least hopefully you'll get some capital back, and then you can move it to something that, you know, has an investment opportunity, such as GICs, just the risk-free rate. Now, it's not a good long-term thing to do because it's not inflation protected, whereas housing, the definition of inflation comes from housing, right? Like a large portion of it. I said it earlier in this video. So I think if you buy housing, you'll be protected against inflation. But if you're buying just for the yield, just for returns on a GIC, it's so liquid. It's cash in, like it's so easy to cash out of it. You're gonna get 5%. Even on high interest savings, there's opportunities where if you take a bit of a loss, at least you have some cash. So
yeah. And sorry to go back to what if you don't want to sell it? Like, you know, what if is there a way? Yeah, well, what can you do? You can move into it.
As long as you're making your mortgage payments, right? Then you're good. As long as you can bear the negative cash flow, maybe you just take a hit for next foreseeable future, like the next couple of years. Anyway, I don't know how long it's going to be for, but at some point rents will rise up again.
Yeah,
and they're starting to go. Like they're kind of teetering back and forth. At the end of the day, there's an oversupply of unaffordable condos. That's just come down, right? Like there's a undersupply of affordable condos, like older ones that are cheap. Because obviously if you sell again, it's not affordable anymore and the price is going to be higher. So yeah, either you take the negative cash flow if you're in this situation, you sell at a loss, or that's pretty much it. Like, you can't just make the market. Like, it's those two things.
Yes.
You know, so each of those situations deserves personal advice. You can always reach out to us for if you have questions about anything. But ultimately, I think, like, you're in the situation. You know, there's no shame in it. It's just the way it is. Don't listen to the trolls out there, and just do what's right for you, what's best for you. And if you're looking to get into the market, of course, there's no better time to invest than today. You know, they always say, best time to plant a tree was last year, 20 years ago.
Yeah. Hey, but technically, buyer's market.
Well, it is a buyer's market, though. And it's going to be worse and worse as the months go on. I think as, you know, inventory is just at an all-time high right now. It's going to continue to grow. I don't see shrinking inventories. I don't see sales booming just anytime soon because rates aren't coming down that fast. So,
yeah, and they're putting so much more supply out there, right? So it's
so more supply, less demand, or flat demand of affordable housing. That is right. So there's tons of demand for affordable housing, but not tons of demands for the premium stuff, the luxury stuff, because nobody can afford it.
And on the other hand, if you need to sell it, then look at it on the bright side. There's more buyers out there, so there's more ways, there's more opportunity for you to be able to sell it. Like, there's a bigger group for you to advertise to.
Well, if you're in a big city like Toronto, yeah, for sure.
Yeah.
It just depends on the pricing, though, right? And the pricing, your timeline, and depends on when you need to sell, why you need to sell. So
you need an expert in order to just position yourself properly, and that's what I'm trying to get to.
For sure. Pretty sure you do. I mean, you shouldn't do this yourself. I mean, you can do it yourself, but whatever. I just think there's good news in the future. I do believe in the city of Toronto still. If you can move it to another asset class that might move a little faster, such as, you know, like our last week we did a podcast for laneway homes and increasing density, but of course that needs a lot of cash. Like, ultimately, you're going to build it cheaper than a condo for sure, like if you build a laneway house, but you still have to buy the property and you still have to come up with cash. So it's not like you can totally leverage it like you were in the case with pre-construction condos where you put 5% down at a time. So that served a certain need for a certain population that needed it at the time, right? And if you're in that situation, just stick to your contract if you can. You know, worst case, you have to sign it. You might have to sell it at a loss. Maybe you make a profit. Hopefully you make a profit. If you don't, then, you know, just hang on, I guess, if you can.
Yeah.
Might be too long-winded. Any questions that you have?
No, it's kind of, see, the difficult thing for a lot of people is just hearing the notion of hang on, like, and how difficult that might be, which is why it's good that you're talking about how to prepare yourself to sell, if anything. Yeah,
so I mean, like, hanging on is a thing where
it's scary.
It's not even scary. It's just more like, can you? If you're losing 1,000, 2,000 a month, maybe even a bit more, times however many cash flow negative properties that you have, can you hold on? You know, like, yes, you might have a day job that covers it, but how much longer can you do it for?
Can you
And
do
the
that
prospects of, and the prospects of the upside aren't there. Like you're not seeing prices like jump to the moon right now. So you're kind of like, well, am I going to hold on for another year or two?
Yeah.
You have an opportunity to have vacancy right now.
That's what I'm saying. Specific to your situation, if depending on your situation, just live in it and just
yeah, if you can,
yeah,
if you can, that's also an option as well too. So yeah, if you're losing that negative cash flow and you're just sick of it, or if you're in a fixed mortgage right now, fixed payment mortgage, and your rates are resetting, and you're all of a sudden going to go from like a 2% rate to like a 5 or 6% rate, that could spell disaster for a lot of people as well too.
Yeah.
So yeah, again, those situations need special advice. We need to look at it. We have a really good spreadsheet I can show you, by the way. When you reach out, there's a trade up spreadsheet or like a seller net sheet. So it shows you exactly what you're going to net out of the sale if you were to sell it. And also rent versus buy calculators. We have those as well too. So with that, I don't know what else to say. We'll finish off with a nice view of the skyline. Let's see over there. This is where we're at. We're blessed to be in a park, in the Riverdale Park. That's where our office is, pretty much there. And look at that view. That's what everyone waits for. All right.
Okay.
Catch you next time.
Bye, everyone. Thank you.
Add it up. Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe. But more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.